What's going on, beautiful people? I'm Lando, Seth's favorite motivational teacher. Before we get started, do me a favor, hit that like button, hit that subscribe button. That helps out the YouTube algorithm. And we are starting a Patreon in June, but more on that later. So the other day I talked about the housing market and how it's going to crash. It's not if it's going to crash, but when it's going to crash. And some people in the comments wanted to see the data to see where I'm getting these numbers, because I was basically talking based on my opinion and common sense of what I believe. But this basically just came out today, right? And this is on thehill.com. New home sales dropped 16% in April, hitting pre-pandemic pace. Sales in newly constructed homes plunged in April as rising interest rates and historic surge in sale prices kept the housing market in a slowdown. Sales of new single-family homes fell 16% to a seasonally adjusted yearly pace of 591,000 homes sold in April, down sharply from the revised rate of 709,000 homes sold in March. New home sales has fallen in 5 consecutive months. So 5 months, new home sales have been falling, and by more than 10% in March and April. So basically, if you look at like Zillow, what they've been doing is finessing the numbers and kind of telling you the goods. It's hard to cover everything up, but they will say the average home price sale has been going up consistently the last 5 or 6 years, right? So they can say the new average home sale is going for $320,000 versus last year it was $290,000. And they would give you those numbers, but they're not talking about that people are not buying homes at the rate they were buying them. And then they will say, well, because we don't have enough homes to give. So they will finesse those rates. So you have to understand what they're doing. The median sale price for a new home rose to $450,000. So I was too far down. $450,000 up from $435,000 in March, and the April average sale price jumped to $570. So you see what I'm saying? And I didn't even read this yet. This is my first time reading this article, and exactly what I'm saying, they will tell you the good. The housing market is now back to pre-pandemic levels, so the massive hit in April should not be construed as the popping of the bubble, said Jeffrey Roach, chief economist for the LPL Financial. The housing market has been roaring hot throughout most of 2020 and 2021, with both home sales and prices soaring until the end of last year. The rise of teleworking and remote learning pushed more Americans to buy or upside homes as ultra-low interest rates and floods of fiscal stimulus fused higher demand. Long-standing shortfalls in home construction and a reluctance among some owners to sell their homes kept up pressure on prices, leading to increases of nearly 20% nationwide. The hot housing market, however, begun to cool off as the Federal Reserve raises interest rates and American families feel the strain of rising prices across the economy. The average interest rates for a 30-year fixed home mortgage is roughly 5.4% this week, according to bankrate.com, after lingering nearly 2% beginning of the year. Think of this, 2% you was able to get interest rates, and now it's well over double. It's mentally not worth getting a house. So just think of this. I was watching a video yesterday, I believe Andre Jick, he was talking about last year, the average mortgage price you was paying for your home was $1,500 for the mortgage. Now I think it's $3,000, or it's something crazy. It's damn near double where you was able to buy a house, the same house, just put less money down and be able to spend $1,500 a month. Now you have to put more money down and spend more. So that's why people, is not worth buying. It's worth waiting it out at this point. As the Fed raises its baseline interest rates range and preview future heights, banks and mortgage lenders set higher rates on home loans as borrowing costs across the economy increase. While interest rates on credit cards are tied directly to Fed actions, banks and lenders set mortgage rates based largely on the the market for the Treasury Department Bonds Act from day to day. Rising prices and increasing borrowing costs are dampening housing demand, especially for the first-time home buyer. Average 30-year mortgage rate constantly crept up in April, stiffening loan demand, Roach said. So people don't even want to grab no loan. A steady decline in home sales may ease up some pressure on the housing prices as fewer buyers compete for homes in the market. Even so, rising interest rates and supply chain disruption will also limit home construction from filling a deep pre-pandemic shortfall of housing exacerbated by the past 2 years. Slowing home sales could also slow the overall pace of the economy, as home purchases and the spending needed to furnish them are the key contributor to gross domestic product. New home sales will likely recover near term as some home buyers draw up new budgets and adjust to higher interest rates, said Bill Adam. Many other buyers will simply be priced out and either turn to multifamily market or rent. Home price increases are set to cool considerably in the next few months as the transition unfolds. So they talked a little bit more, and you see right here, they say we added over 2 million jobs. So they're saying we got some jobs, but that's not really helping things out. Builders continue to face supply demand challenges and low availability of labor of land. Only 28% of new homes sold in the month they were completed. So homes are not literally being built and just being sold immediately. They're still getting sold quick. Prior to the pandemic, that figure was around 40%. So it was damn near 50% chance you was building a house and it was getting sold immediately. And last, they say in recent lockdowns in China and the WAR in Ukraine are going to add insult to injury, since those shocks have yet to be fully felt. What are your guys' thoughts in the comments? I want to hear what y'all thoughts, because I've been saying it. We have another crash coming. That real estate market crash. The numbers are here. And the way it go, you see the numbers a month delayed. So they'll show like April numbers. Then in June, we'll see May numbers, and everything is just literally going like this, and it's going like that completely fast. I'm going to be talking about this a lot in my Patreon. If you're not signed up, what are you doing? We are getting started the beginning of next month. You can get signed up right now, literally only $20. I'm going to show you how to build a portfolio from scratch, a crypto portfolio, stock portfolio, what I'm doing, why I'm buying certain things. I just uploaded this today where everybody can see it. The tiers of how you will want to invest depending on how much money you got. You can have little as $10, $100, and I'm going to break down different ways. All you have to do is sign up and you will get full access, and I will be doing portfolio reviews. So just go ahead, click the link in the bio or in the top of the comments. You will definitely be satisfied and get your money back times like 10 within the first few days of the month. You will definitely see the value. Let me know your thoughts in the market. Don't forget to hit that like button, hit that subscribe button. I appreciate all you guys. See you soon.